Now, Telkom has sold its towers business Swiftnet for close to 7 billion rand to a consortium of equity investors, including Actis and Royal Bafokeng Holdings. And RMB has acted as the financial advisor on the transaction. The group's co-head of telecommunications and technology, Arun Varughese, joins me now. Arun, thanks so much for joining us today. Now, let's just start off with that. What was RMB's role when it comes to sealing that deal?
Thanks. So we were the financial advisor to the Royal Bafokeng Holdings, and we helped them and the consortium undertake the transaction into Swiftnet.
And now, as you acted as a financial advisor, we already know that the sale of Swiftnet is part of Telkom's plans to unlock value as well as reduce its debt. But what about Royal Bafokeng Holdings? How does it align with its strategic plans?
So the transaction is RBH's first investment in the tower infrastructure space. So RBH, as you know, it's an investment arm of the Royal Bafokeng community, and they look to invest in infrastructure and high-yielding assets. Digital infrastructure has been one of the areas they have identified as an area of growth, and this transaction marks a first and hopefully many for them in this space.
So let's discuss the merits of this deal. I mean, when we look at trends in the telcos industry, you'd think fiber assets would be a bit more attractive. Why buy into towers now?
So I think if you take a step back, what a mobile tower is actually a piece of steel infrastructure that's on the ground, and it's actually a critical part of any MNO's operations. Without a mobile tower, you simply can't transmit any signal, and therefore you can't connect to your consumers. With the advent of 5G and rising connectivity in Africa, there's still hundreds of millions of people that don't have access to internet, and the people who do have access to internet are demanding more and more data and faster speeds. That really points to one thing, and that's to growth both in mobile services and by induction, growth in mobile towers. I think by our estimation, we think the towers in South Africa are going to grow by another 6,000 towers by sort of 2032. And there's also a lot of space for the tenancy on these towers to increase. There's a lot of secular trends that are actually underlying the growth of towers, and we think it's actually a really attractive space in the digital infrastructure space in South Africa.
So would you say then it was a good move on Telkom to let go of these assets?
So I think if you take a step back and look at what mobile operators around the world have been doing, is that because of their business model, they've been trying to lower their capital requirements. So as you've seen, MTN has sold off its towers across Africa. You've seen other mobile operators do it. And the reason why they do it is owning a tower is not core to your operation of providing connectivity. You can do a sale and lease back with a tower co like Swiftnet, like an IHS or Helios Towers, get the capital back and use the capital in your core business. And in return, you just simply pay a lease, and the towerco undertakes all the maintenance, the operations, the building, and the expansion. So it takes a lot of management time and refocuses on the core, and also frees up a lot of capital. So this is a trend that we've seen around the world happening, where mobile operators have divested of their tower operations. So absolutely, we think it's the right direction for Telkom to go.
And I just want to talk about trends within the TMT kind of sector. We've seen a lot of M&A activity take place over the past few years. Is this also a growing trend we're possibly going to see moving forward?
Absolutely. So look, I think if you look at just the tower space as an example, MTN sold all their towers to IHS in 2021. Vodacom has separated all their towers into a new vehicle called Mast. And you've seen African telcos like IHS and Helios Towers, buy portfolios in Brazil, portfolios in Oman, Senegal. So yes, I think the nature of the tower market is one where M&A drives a lot of acquisitions, and we think that there'll be a lot more of these to come, because still about 30-40% of towers in Africa are still owned by MNOs, and eventually we think those will all end up in sort of private hands. So absolutely, we think this trend will keep going. And on the back, and that's one trend. And the other trend of needing more and more mobile connectivity. Just from that, we think we'll see a lot more activity coming also.
So M&A activity aside, Arun, how is the telcos and tech sector in South Africa particularly faring against its African peers?
Look, I think it's South Africa is still quite a stable market, but it has its problems. I think the MNOs from Vodacom to MTN have found their challenges both in Nigeria and in South Africa with load shedding, with rising competitiveness around data packages, with the lower use of voice and SMS. So there's a lot of headwinds, and also obviously they've got to spend lots of capex to keep their networks up to the right standard. So that being said, the digital infrastructure market, being towers, fibers, data centers, has been doing exceptionally well. Fiber companies have been expanding all over South Africa and going into Africa. You've seen all the transactions for data centers. You've seen all the major data center players, break ground in South Africa, and you've seen the undersea cables land. So I think the digital infrastructure story is quite a good one, and we still have a long way left. For example, connectivity in rural and informal and lower LSM areas, that still hasn't happened. So from a connectivity story, we're still quite positive on it.
Arun, unfortunately, we have to leave it there. Thank you so much for your time and those insights. That was Arun Varughese, co-head of TMT at RMB.